as commercial real estate investors, the United States is wildly still undersupplied with housing units. There are millions and millions of housing units that we are short, which again make for a favorable case, in our opinion, for us to invest our dollars in commercial real estate, specifically apartments. That has not changed with the election. New construction in the commercial real estate space, the apartment space, has made those new developments come to a screeching halt. Why and what exactly am I saying? Okay, let's talk about the what first.
Welcome to the Secrets to Abundant Living podcast. Your guide on this journey is Amy Sylvis. If you're ready for the secrets to an abundant life, hit that subscribe button now, and let's get started.
Secrets to Abundant Living podcast community, welcome back to another episode of the podcast. I'm excited to see you today. For those who don't know who I am, because the podcast is growing by leaps and bounds, thanks to you all, my name is Amy Sylvis. I am the founder and principal of Sylvis Capital, and we connect investors to hands-off real estate investment opportunities in emerging markets throughout the United States. So it's been a minute, y'all. We've had a few things happen since we spoke last, and I'm excited to bring you up to date in terms of what we're thinking about here at Sylvis Capital that may be interesting and educational for you all as well. And when I talk about a few things that happened, I'm not talking about my disastrous USC Trojans, sad trombone, wah wah. This season has not turned out to be the way that we were hoping. But as I record this, we are, I think, 9-point favorites over Nebraska at home at the LA Coliseum. So we'll see. Who really knows? I did see a recent social media post that we're going back to wearing retro uniforms from 1972. So sure, let's try that. Let's see how that goes. But I did just get off the phone with an investor who is an Indiana Hoosier, who of course is extremely excited about the season that they're having. So love to hear that. But more importantly, we just had an election. And, the fun part talking about the election is that there are going to be people listening to this who are devastated and others who are very excited. But my job here today is to really talk you through what we're thinking about at Sylvis Capital as sophisticated investors, and to give you education that you may be able to use in your own portfolio that may be helpful. None of this is ever investing advice. I am not an investment advisor. I am not a lawyer. I'm not a CPA. I am not a tax professional, but I do share what I'm thinking about. I do share education, and you can decide if this information is helpful and useful to you. So as I was thinking about recording this episode, and because it feels like, there may be some change on the horizon, possibly, I'm not going to get political here necessarily and say, where I stand or any of that. I want to talk about the data and what we know. So we're going to talk about first what has not changed in the investing environment, especially in commercial real estate, the economy, and all the data surrounding that. What hasn't changed? What do we know? And then I'm going to talk about what I'm watching, what we're taking a look at, what we're examining, what we're trying to understand moving forward as we continue to make investment decisions and assess where we may be going next. So the first thing is the Federal Reserve last week cut interest rates for the second time. It was a 0.25 point reduction, and that is on the heels of a 0.5 point cut. So the Fed is now cut twice in a row. And that is obviously a divergence from the 2.5 years or so where rates were either being hiked or were held steady. And this could have a big impact on liquidity. And we've put our investor hat on. The Fed, well, in theory, but the Fed should be completely independent of the election, of what's going on in terms of the presidential election. And the Fed, and especially Jerome Powell, has given us indication that they are continuing to monitor the unemployment rate. They're continuing to monitor jobs and, of course, the overall growth of the economy in terms of what they're looking to do moving forward. But we do know that all things equal, the Fed cutting rates generally puts more liquidity into the market and can be favorable for assets. Can be, right? Nothing is for sure. That's the art of investing. The other thing, though, that I don't hear talked about as much is the fact that the Fed is still decreasing its balance sheet, which, again, we're not looking to get super technical here, but the Fed decreasing its balance sheets may have a opposite impact than it cutting rates. Obviously, those are two different activities the Fed can do to slow down or stimulate the economy. So we'll be watching that. But we do know, as I said, when we talk about what hasn't changed, is that is also going on in addition to the Fed raising interest rates. The Federal Reserve, as we've talked about here many times, is not federal, does not have reserves. It is simply an organization of banks, private banks, that get to make decisions on currency creation, overnight rates in which banks lend money to each other, and that can have an impact one way or another on the economy. I think what a lot of folks are concerned about is, could the Fed cutting rates create more inflation? We've reached this, I don't know if it's a bottoming, I don't know if it's a nadir of inflation that was left over from COVID in the United States. And obviously, none of us want inflation to rear its ugly head again. So understanding that it's important for us to follow the CPI, to understand what may be happening, again, if there is, in this soup of economic data, perhaps legislative changes, law changes, all sorts of things that may be coming with a new president, or a president that used to be president but is now returning. Inflation, obviously, is not great, especially for those that are on the lower edge of the economic spectrum and for those with fixed incomes. But there are asset classes that tend to do well in times of high inflation. So monitoring where inflation might be, where it may be going, and making investment decisions accordingly is where we are at Sylvis Capital. Hard assets, gold, silver, real estate, commodities, those tend to do well during times of high inflation, especially for capital preservation. So is inflation returning? Is that going to be the result of interest rates lowering? Time will tell. And the other asterisk I have there is truly, is CPI, the Consumer Price Index, actually accurate? So we're going to put on our tinfoil hat there. You've heard me talk about this, but the way the government can measure inflation can very easily be manipulated. I'm not saying it is, but the reality is it can be. And there's a lot in the government's, what do I want to say? They would have a lot of reason to understate inflation, whether it's political perception, whether it's entitlements that they have to pay more on if inflation is higher, all of those things. There's a reason why inflation may be understated. So if you go to a website called shadowstats.com and look at how the CPI used to be measured, it's interesting. It's an interesting rabbit hole. I'm not saying I'm endorsing that, but what I am saying is, as sophisticated investors here at Sylvis Capital, we really monitor this data and understand the context in which the data is being measured to make decisions the best way we can. Okay, so we really nerded out here. I'm glad you're hanging in there with me, but I do think it's important for you to understand what's going on in terms of the Fed's moves, the consequences of the Fed's moves. Here's the other thing. As commercial real estate investors, the United States is wildly still undersupplied with housing units. Obviously, this varies from market to market across the United States. Not every market has the same degree of undersupply, but the truth is, overall, there are millions and millions of housing units that we are short, which again make for a favorable case, in our opinion, for us to invest our dollars in commercial real estate, specifically apartments. That has not changed with the election. So what else has not changed is the fact that housing starts or new construction in the commercial real estate space, the apartment space, has made those new developments come to a screeching halt. Now, Why and what exactly am I saying? Okay, let's talk about the what first. It takes a while for folks to develop, obviously, new apartment buildings. That was going gangbusters prior to 2.5 years ago when the Fed started raising interest rates. Development is significantly easier when interest rates are lower. So yes, is there new inventory coming online? New apartment buildings coming to places like Dallas, Texas, Nashville, Tennessee, Huntsville, Alabama? Yes. But that development started over 2.5 years ago. What we're seeing since the Fed began hiking rates, and they reached their peak, the folks developing new housing since the interest rates went up has fallen off a cliff. So we are likely to reach peak supply of these new housing units coming online in 2025, maybe halfway through, 3/4 of the way through Q3, maybe Q4. It always depends on how quickly, they're able to complete construction. But as we look into the end of 25, 26, 27, there is not a lot of new inventory coming online because it's been really tough for these folks to do new development here in 23, 24, and even parts of 22. So I say all of this because, again, I want to share what we're thinking about in terms of investors in commercial real estate. We are short housing, and the activity to develop new housing has slowed down quite dramatically. So for us, we feel quite bullish as real estate investors in that space. So what am I watching? Because yes, there are unknowns right now. And as I'm sure you've heard, we have the known knowns, we have the known unknowns, and then we have the unknown unknowns. So obviously, I'm not talking about the unknown unknowns here because guess what? None of us know them. But some of the known unknowns that we have are with regards to a few of the new Trump presidency's policies. So we all know, and this is not a political statement, so everyone can clutch their pearls. You can let your hands go from clutching those pearls. Every administration on the campaign trail, or every candidate, on the campaign trail, makes promises that they don't follow through with. So what do we have here with another presidential candidate in Trump are some statements about economic policy where we're not totally sure if he will create an executive order and follow through with them. We're not sure if Congress will pass laws. There's a lot of gray area and uncertainty with some of these items, but I'm going to bring that up because I'm going to encourage you to watch what happens because it's what we're watching as well. And it may help you as a sophisticated investor. Tariffs. This is interesting. A lot of controversy around tariffs. I'm not going to make a statement on whether it's a good idea. That is not what this podcast is about. This podcast is about being an investor that's armed with information. And so understanding what impact tariffs could have. We're not going to debate the legitimacy or how wise implementing tariffs might be, but instead understand, could tariffs cause higher inflation in the short term? Very possibly. If prices go up because there is less supply of some goods, that could be inflationary. Will this happen maybe over the medium to long term if manufacturing comes back to the US and those goods that are manufactured are no longer subject to tariffs? Could that increase supply, bring those prices down? Yes, lots of what ifs. But the important takeaway that I want you all to take from this and that we're examining at Sylvis Capital is, will these tariffs go into effect? How widespread will they be? What will the impact be on? Obviously, they won't be equal tariffs across the board, across all goods, right? That's not how that works. So I'm just really following and seeing what the Trump administration does in that respect. And again, as multifamily, as apartment investors that love to do a strategy that's called value add, which is we buy apartment buildings that haven't been renovated in a while, that residents want nicer units. So we provide those by renovating. Could that be something we need to take into consideration, the higher cost of some goods that we use in renovating? Possibly. But inflation, again, overall, our posture in an inflationary environment is not only to protect our wealth, but grow it and take advantage of the great things about owning hard assets. So if inflation comes back and rears its ugly head, some might say it hasn't gone away, but if the official stats show us that, that will cause us to evaluate our strategy. Okay, the jobs numbers. If you've been following jobs, you've seen that the last jobs numbers were quite pitiful. Yes, there was a hurricane. Yes, there were, I think, Boeing layoffs. Yes, there were a lot of confounding factors, and just examining jobs numbers for 1 month in isolation may not be as helpful, but looking at a trend can be very powerful. And as investors, we have to really understand what's going on in terms of consumer sentiment, employment, income, all of those things. And if you haven't been noticing, the jobs revisions have been wild in the United States. Numbers are released, then they're revised several months later, often revised down. Doesn't look so great. It really doesn't look so great. And why does that matter as investors? Well, especially in real estate, in apartments, if we have residents who don't have jobs, or their jobs are paying less, that impacts us. That impacts our ability to get returns on our investments. So making sure we're not only paying attention to the overall jobs numbers in the United States, but looking in a focused way in the markets in which we invest is going to be very important moving forward. Making decisions and understanding, hey, is the Trump administration, is the economy going to change for the better, for the worse? I'm not making a statement. All I'm saying is we are going to watch those job numbers, not just what is initially presented, but also what they're revised to if that pattern keeps continuing, because it's very important. Ooh, we're going to get into this next one's going to get you all to clutch your pearls, so get ready. Deportation and immigration. Here's the bottom line, non-politically. Increased demand for apartment units via immigration is favorable for investors, all things equal. I am not making a comment on whether I think there should be deportations or whether our immigration policy should be revised. This is apolitical. We are talking about demand for apartment units by people, by human beings that are in the country, regardless of their status. This is something to watch. This is definitely something to watch. Countries around the world are dealing with decreased fertility rates. Population is at risk of declining. The United States is also facing serious headwinds. I'm not going to connect that with our immigration policy, but if there is a decrease of people, whether folks leave on their own, whether folks are deported, whatever that looks like, regardless of the cause, it doesn't matter. But if there's a decrease, that may result in a decrease of housing demand in some areas where there is a loss of population. It is no different than any negative net migration in any market, whether they're native-born people, whether they're immigrants, whether they're here legally or illegally, doesn't matter. This is an important thing to watch as apartment investors that we'll be watching as well. And particularly, as you can imagine, this isn't going to impact all markets across the United States equally, right? All real estate is hyper-local, so understanding where we invest currently and the strategies that we may need to implement if there is net out migration into those markets. And as we examine markets to invest in moving forward, what sort of impact this type of policy may have. All things equal, it's a nuanced issue. It's a very charged issue. So, hey, yell at me in the comments. That's fine. Engagement is great on YouTube. So I'll take it. But the reality is, as investors, demand for what we have, in this case, apartment units, regardless of the source, is important to understand. Now, will this impact all apartments equally? Maybe not. Maybe the type of people that will be impacted by deportations or voluntarily leaving the country, maybe they're not the Class A investors where they're paying the highest amount of rent in a given area. Maybe they're more working class, Class C investors, Class C residents. So maybe there's an impact disproportionately on a certain asset class of apartment commercial real estate. Food for thought. This is what we're thinking about. I'm just sharing so you can get an idea and learn from us. Have you ever thought about having multiple streams of income? Instead of relying on just one stream of income where you're trading your time for money, how would you like to free up more of your time and live a more abundant life? As a listener of the show, you're invited to attend one of our upcoming trainings where I'll give you an inside look into how you can add passive income and get all the other perks of recession-resistant real estate investing without the headaches of being a landlord. We'll also be sharing some hidden mistakes to avoid and the criteria I personally look for when evaluating potential investment opportunities. To reserve your seat for free, go to sylviscapital.com/webinar. Again, that special link to reserve your seat for free is sylviscapital.com/webinar. I look forward to seeing you on the training. And now back to the show. And then, of course, foreign policy. Foreign policy may not seem connected necessarily to real estate investing or creating hands-off income. But in general, markets like stability, markets like certainty. So any sort of deviation from that, whether it's black swan events, whether it's another war front, these things can destabilize markets, cause economic challenges. Again, this is a broad brush. This is a very nuanced topic, but understanding foreign policy, understanding where our government is spending money. The government spending impacts the economy, right? They can really impact by directing where the money goes, where our tax dollars go. So if money is not going to a war, but is instead going somewhere else within our economy, how could that change things in terms of economic sentiment, GDP growth, income growth? All of these things have cascading effects, if you will. This is a technical episode, y'all. I hope you're able to follow. I have been asked by many of you to really give more of an insight in terms of what we're looking at, especially in times of change, to understand where we might be able to earn a return on our investment, preserve our wealth, and protect what we've worked so hard to earn in terms of our net worth. And hey, the election was something. We weren't sure what to expect. We have our result, agree with the result or not, be upset by the result, be happy. I would encourage you all to really stick to the data, understand the impact of certain policies, maneuvers, market sentiments will have, and then make decisions from there. Not saying you can't be emotional about it, but I think sensationalism, especially in the news, can be a distraction as investors. But paying attention to actual policy, actual data will help guide all of us tremendously to protecting, preserving, and growing our wealth. Woo! Okay, you hung in there. Thank you all so much. It's always so great to talk to you all. Please remember to throw a comment, throw a review, share this episode with somebody. It is so rewarding to be able to add value to you all. And the way we're able to continue this podcast is by growing. And if we're not growing, we won't be able to continue to do the podcast. So thanks again for sharing. Have a magnificently abundant day. And I look forward to talking to you all soon. Bye for now.
Thank you for joining us on another episode of the Secrets to Abundant Living podcast. We hope you found inspiration and valuable insights that will empower you on your journey towards abundance. If you enjoyed today's episode, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us, and it helps others discover the secrets to an abundant life too. Stay connected with us on LinkedIn, Amy Sylvis. Keep striving for your goals, nurturing your relationships, and embracing the adventure that is life. Until next time, we wish you an abundantly fulfilling day.